How's it going, everybody? KCG Trades here, and first and foremost, I really want to say thank you to all who have been supporting my channel as of late, all those who have subscribed, liked, commented, even those who have just watched. I really appreciate it, and all the support really keeps me going. Knowing that I provide some sort of value to you guys really means the world to me, so once again, thank you very much for the support. Now, moving forward to the overall market, in terms of how I'm feeling great, mainly because I got a haircut, the weather's getting better, my beard's coming in, everything is just coming together perfectly, making me feel really good, which ultimately makes me perform better in the stock market. The stock market has been frustrating as of late, as you guys know, especially for growth traders. It's been very rocky, no sustainable moves. Breakouts have been failing. But there is still ways to make money in the market. You just have to adjust or not trade at all. It is up to you. If you always want that action, always looking for some sort of trade, there has been trades that have been making money. But otherwise, if you have a strict process sticking with growth names only, this has not been the market for you. A lot of names in the tech sector have been doing very poorly, which is definitely expected because of how strong the move was last year. So a lot of it now is just consolidation or just resetting into new bases, which is perfectly fine, but the frustration comes in because we see the markets and the indexes going into all-time highs, while a lot of the names we're watching, growth names, are declining or just consolidating. So obviously the frustration sets in. But like I've been mentioning, there are still a lot of ways to make money in this market. Just because breakouts are failing and just because a lot of names in tech aren't doing well doesn't mean there's more names or there's other ways to make money. There are different sectors such as shipping, steel, oil, retail that are performing very well, and pullbacks are still working. So if you find proper pullbacks to certain moving averages, buy them, hold them for a couple of days. They are still working for swing trading. This is definitely a swing trading market and not really a position or trending market. So you have to adjust to the overall market conditions. Because we're in a range bound market, you want to only trade for a couple of days to get those quick swings and get your profit. So that's what I'll be focusing on this week until the market conditions change. Going for quick swings, buying pullbacks, just building my overall confidence so that when the market trends again, I'll be able to take full advantage. All right, so starting with the overall market, we'll start with the Nasdaq, the QQQ. If we take a look, it has been range bound for the past couple of weeks. And if we take a look, it still is making that overall cup with handle pattern. The action that's going on in the indexes is not bearish at all. It's actually quite constructive, but something that is too obvious tends to not happen. So I actually wouldn't be surprised if we maybe get an undercut or maybe just a shakeout to the 21-day or even the 50-day moving average in the Nasdaq. The thing is, we've also had a lot of some distribution in the overall market. If we take a look at higher volume on down days, especially on the SPY, the S&P 500, if we take a look, we had bigger volume on red days with not much movement. That is signs of distribution and maybe signs of a short-term top. So once again, I wouldn't be surprised if we do see some sort of shakeout or a big drop to a specific moving average like the 21 or the 50-day. So that is something I'm definitely watching for, and I wouldn't be surprised if it happens. Also, to tell us the overall market conditions, we had earnings last week, a lot of big name earnings, and we actually saw that even though the earnings were good, the reactions weren't as good. If we take a look at Amazon, for example, we had a good earnings gap up, as it announced on Thursday, a good earnings gap up, but then closed near the lows of the day. Even Apple, if we take a look, had good earnings, but then look, we started to sell off and closed near the lows on Friday. Other names like Shopify had a nice move, gapped up, and then continued higher, but the next 2 days fall back down and looking to close the gap. Even if we take a look at growth names such as Pinterest, had a huge gap down for the first time, closing back in the 60s. So this is just giving us the overall market conditions that even though earnings are good, the reactions to it aren't that good. So it's giving us an idea of what this market is kind of acting like. So like I said, I wouldn't be surprised if we see more drawdown in the overall market. However, we could also see, just consolidation for the next couple of weeks still, or maybe just one more week, or even just a move above this consolidation and make new all-time highs. At the end of the day, we don't really know, but the signs that it's telling us right now is that we could possibly be in for a move lower. However, we're in the interpretation business. We're not in the prediction business. So whatever the market decides to do, we'll move forward from there. So that was the Nasdaq and the S&P. If we take a look at other indexes like the IWM, Russell 2000, it does look just to be consolidating for now. No real direction, just to be finding support at the moving averages. So wouldn't be surprised to see more consolidation, sideways action. Take a look at the IWO, which is the Russell 2000 Growth ETF. We broke out of this little mini consolidation here last week, but then we closed the week below it, finding support at the moving averages again. So right now there's no real direction. It is very choppy. So once again, this adds to the overall frustration. If we take a look at the 50, the IBD 50, we broke out of this downtrend line here, and then for the whole week we kind of just rested, kind of took a pause. The good news is it was on lower volume, and we did find support at the 10 EMA. So let's see how growth stocks act moving forward. If we continue higher, chug along higher, or if we continue to drift lower into these moving averages. If we also take a look at the VIX, it is starting to get a little more volatile if we see some bigger spikes recently, rather than just small action. Bigger spikes mean more volatility, and it's becoming more frequent. So also, once again, wouldn't be surprised to see more volatility and break out of some sort of consolidation to the downside or upside on the overall markets. So that's overall what the market is kind of being like. Very choppy, breakouts are failing, no real direction. So it's basically just a waiting game to see where the market takes us. But for now, we still want to take advantage of what's being given to us via individual stocks. And there are 9 stocks on my watch list this week, starting with CPE, Callon Petroleum. So CPE is in the oil and gas industry that has been performing very well, has a nice prior uptrend, and has been consolidating for the past 2 months. If we take a look here, it did find support at the 50-day moving average. Did try to break out on April 29th, but as we know, breakouts are failing right now. So I'm essentially looking for another red day on Monday, finding support at the moving average, and that's where I'll be looking to buy. So that will be positioned if it does attempt to make another breakout. It's more safer to buy at these pullback levels right now. So if we get a price around the 36 to low 36 to high 36 levels, I'll feel more comfortable if it could hold those levels to make a new move up into the 40s level. Also, these are quick swings, quick hits that I'm trying to get. So if I do end up buying at 36 levels, I'll probably try to sell once it hits this resistance level around the 40-41 instead of trying to hold for a breakout. That's just how I'm going to play it because of the market and how it's acting right now. So that's my first stock, CPE, and the next one is INMD, InMode. So INMD has been a very strong stock as of late and has been trending beautifully. If we take a look at the past few days, it has been pulling back on lower volume, so that's exactly what you want to see. Essentially, what I'm looking for is one more day of low volume that is pulling back, essentially hitting the 21 EMA, and I'll be looking to start a position from there and see where it takes me. It is definitely not something I'm going to be holding for long. If I'm wrong quickly and I'll get out. If I'm right, I'll be looking to sell near the 90 to 91 level just to get those quick swings that I've been mentioning. That's pretty much it. That's all I'm looking for INMD. The next stock is ISRG. So Intuitive Surgical is more of a big cap name, but the action that it's been showing lately has been very constructive. If we take a look on Friday, it had a nice little surge to end the day on better volume. Essentially, what I'm looking for is a completion of this symmetrical triangle. I would like to see some more consolidation, some more volatility contraction to complete the symmetrical triangle, more inside days just to get tighter and tighter. And if we could get a break above this downtrend line above it, I'll be looking to enter. If it goes below it, then obviously I won't be touching it. That's all I'm looking for. I'm essentially looking for the 10 EMA to also catch up to the price. It is very close, but if we could get more tighter action and then a breakout above it, that's what I'll be looking to buy, and then I'll be looking to sell right around the highs of the 893 level, just to prevent a failed breakout. So that's my plan for ISRG, and my next stock is MGNI, Magnite Inc. So MGNI is actually setting up very nicely for a downtrend line breakout. This is actually one of my favorite setups going into next week. On Friday, we had a beautiful inside day that closed above the 10 and 21 EMAs on better volume. So essentially what I'm looking for is a break above this inside day, 10 cents above it around the 41 level. I'm looking to buy there. And if we could get a move above that downtrend line, that'll be very constructive. I do suspect some overhead resistance at the 50-day moving average. So if we do end up getting there, I might look to sell some or even sell all, depends how we act from there. But that's what I'm looking for. If we could get above it on good volume, that'd be even better. But if we're looking for just a quick swing, I'll be looking for the 41 to the 43 level as my swing trade. And that's my plan for MGNI. It is a very constructive pattern, as I do love downtrend line breakouts. But like we said, breakouts aren't doing the best right now. So if we could get a quick swing, that's all we could really ask for. So that's really my plan there. And the next stock is MTDR, Matador Resources. So MTDR did actually try to break out on Thursday, had a nice uptrend, had a nice little base for the past 2 months. Tried to break out on Thursday on good volume, however closed right under the breakout levels, and on Friday we actually failed below it and closed at the lows of the day. So that just shows you the type of market environment we're in, but that doesn't mean that we should just get rid of the stock immediately just because the breakout has failed. A lot of the times breakouts failed, come back to the moving averages, and then continue to move forward from there. So what I'll be watching for is maybe a 1 or 2 more days that just hit the 10 or 21 moving average, find some support there, and then continue to chug higher. Essentially, same thing that I'm looking for in CPE. A failed breakout and then a retest of a certain moving average that finds support, and then buy there and then watch it continue and chug higher. That's really my plan with MTDR. Around the 24 to 25 level is where I'm looking to enter, and then see how we act towards the rest of the week, if it could find support there, and see if we could retest those highs. And the next stock I'm watching is Cloudflare. So Cloudflare is a tech name, but it has been showing us signs of accumulation. If we take a look at the volume patterns, the green days have been pretty significant in terms of volume, while the red days have been very low on volume. So that's always good signs. It broke out of this low cheat entry on good volume here, and it has been starting to create this little bull flag pattern. But really what I'm looking for is a few more days of constructive action inside this bull flag, low volume pullback, of course, wanting to see if the 10 EMA can catch up to price, and if we could use the 10 EMA as support moving forward. If we could do so, I'll be looking to buy a position at the 10 EMA and see if we could eventually break out of this bull flag pattern and retest these highs. This is one of the best patterns right now for growth stocks. So I want to see if it can continue acting as a leader and see how it acts moving forward. The next stock I'm watching is RH. So RH has been on a hell of a run lately, going from the low of 410 to 733, almost doubling in price. But now I want to see if we could pull back to a moving average, especially the 21 moving average. That would be the most ideal on lower volume. It has been on quite a run recently, so it is a bit extended. So finding support at the 21 moving average would be ideal for me, and I'll look to buy a position there. Maybe even a retest of this little breakout here at the 619 level. I wouldn't be surprised if it does hit that. If it does, I'll be looking to start a position there and hit a quick swing to see if it could hit the retest of these highs at the 733 level. Very simple, very straightforward. And the next stock I'm watching is Snapchat. So Snapchat has been on my radar for quite some time, and it did actually do pretty well for the fact that Pinterest, Snapchat, and Twitter all released earnings this week. Pinterest and Twitter did fairly poorly, and it actually gapped down, while Snapchat released solid earnings, and it actually held up pretty nicely, reacting in sympathy to Pinterest and Twitter's earnings. So this is showing me that there are buyers willing to step into this stock and wanting to see it go higher. It did go from like a double bottom to a cup with handle to now it's like an inverse head and shoulders, but essentially we really need to just get above this $65 level. It has been acting as strong resistance, but if we could really get above that, I really think we could retest those highs and make moves to new all-time highs. So this will be on my watch list until this really breaks down and fails, or breaks out and hits new highs. So the last stock I'm watching is TPX Tempur Sealy. So Tempur Sealy has been on a nice uptrend since last year's March lows, going from $5.50 to the high of $41. It did try to break out last week, but failed, as most stocks did. So now I want to see support at the 50-day moving average, and that would be my most ideal entry point. If I could find an entry near the 50-day moving average, it really defines my risk, so I know where to put my stop loss, as well as if it does find support and continue to move higher and retest those highs, I'll have a nice cushion to either sell or possibly add if the market ends up acting well and continues to make new highs. So that's really what I'm looking for, just to see if we could find support at the 50-day. I'll be looking to buy a position there. So that's pretty much all for this week. I know it has been a very frustrating market, but it's very important to stay positive, stay enthusiastic, because you never know how quick things can change, and you always want to have the right attitude to make sure you're always on the right side of things. You don't know how bad you could end up trading just because your mental isn't there properly. So always stay positive, take breaks if you need to, and it's always important to remember sometimes the best trade is no trade. So if nothing is setting up, don't have to trade at all. Take a break, go for a walk, do anything else, just keep your mental in check. So that's all for the week. I hope you guys have a wonderful week. Good luck in the markets, and you already know what to do. Like, subscribe, share with your friends and family. Have a wonderful week. Take care.